Today is very much a conversational styled webinar. We're going to be talking about insurance claims and some of the challenges that have come up and how the solutions can be put in place. So there's no PowerPoint presentations, and I hope that you find the information relevant and interesting. So as I mentioned, before I introduce the panel, just a little bit of housekeeping. You will see that there at the bottom of your screen is a little box that says chat. I'm sure many of you know it. If you select on the drop-down menu that says everyone, this is the space where you can host or place some of your questions. We have received a few questions via the sign-ins and registrations. I received some on email, but this is the area where you can place your questions and we'll do our best to tackle them during the course of the next 45 minutes. So let us start with a few. We're also going to do some poll questions throughout the course of the webinar. When the poll question comes up, like the one now has just come up onto your screen, if you would be so kind as to answer it. And then once you're done, just click on the little red toggle and it will take it out of your line of sight. The panelists just click it off and it will be out of your way. So let's get going. So when we looked at navigating insurance environments and flood damage and claims, I looked at towards what had happened in the November-December period down in George, and now currently is happening to the folks in KZN. And I hope that those of them that are listening to this will really get some value from this webinar. So we before the start of the webinar, we were joking that Willem was saying he must be mindful of what he says to me just in case I drag him into a webinar, which is exactly what I've done here. So Willem Jacobs is the CEO of the Kingswood Golf Estate down in George. Many of you know it. It is a beautiful environment. And when Willem introduces himself, he'll tell you a little bit more about that. No discussion about insurance would really be a discussion if we didn't have a representation from the insurance industry. And I think that, as many of us know, one of the largest companies that are actively working with both homeowners, residents, community management, property developers is the OUTsurance group. So Ashwin Ramjiawan is going to be presenting today. He's the business underwriting manager, and he's going to discuss, and we're going to be putting him in the hot seat there, and we're going to be discussing a little bit of some of the kind of policy or claim challenges that Willem has faced. So let me hand over to Willem. Willem, if you would mind introducing yourself and tell us a little bit about Kingswood.
Hi, Lou. Thank you very much for the introduction. And yes, one has to be very careful what you say to the estate living crowd, because they will definitely make use of you in a future edition. I'm Willem Jacobs, as Lou said earlier, the CEO at Kingswood Golf Estate. I've got legal and general management background and have been the proud CEO of this wonderful and beautiful estate called Kingswood Golf Estate in the heart of the Garden Route for the last 3 years. And yes, I thought I knew a lot about general management, but I obviously learned that you have to be a jack of all trades and a master of all when you take on this challenge. So that's me.
All right, thanks, Willem. Ashwin, if you could introduce yourself.
Yeah, thanks, Louise, Willem, and to the wider audience. I am one of the business underwriting managers at OUTsurance, the commercial division. And basically what we do is we involved in underwriting the commercial risks. I've got close on to 20 years of experience in the short-term insurance industry. My background is I have an architectural qualification. I also come with risk assessment experience. I've done that for many years, and I now find myself in the short-term underwriting of commercial risks, and that's where I've been. I actually enjoy what I do, and yeah, we'll see where the webinar goes.
I'm glad you added you enjoy what you do. Let's hope we don't change that today. So, so Willem, perhaps we could set the stage. November, December last year, and the floods. The rain comes down, and maybe you could just sort of take it from there. Give us a bit of an idea of where you were from an estate perspective at that time. What had you anticipated these floods coming, and how, you know, were you caught unawares, and what was that absolute immediate reaction to the flooding?
Yeah, Lou, I think rude awakening probably describes it best. We were woken up 20 minutes past 4 on the morning of the 22nd of November by security phoning me and saying that everything is washing away, sir. You know, so I had to get up and go and have a look what's actually going on. Just to put it in perspective, you know, Kingswood is an estate of just over 900 single title urban, currently housing just over 2,000 homeowners, excluding gardeners and domestics, etc. That pushes it up sometimes to 2,500, 3,000 people. We're expecting ultimately, when the estate is fully developed, because we are not fully developed here. So anyone looking for the best possible property investment in the garden route, you're welcome to contact us. We're probably going to be over 4,000 people, souls living on this estate at any one time. So we've got 4 entrances to this estate. We've got a river running through the estate, and a tributary of that river also running through the estate. And on the morning of the 22nd of November, we received over 134 millimeters of rain in less than 2 hours. Now, for anybody that you know, knows hydrodynamics, it's impossible for the ground or stormwater systems. Stormwater systems are designed to cope with 1 in 10 years, 1 in 20 years flood. We received a 1 in 150-year flood that morning of the 22nd of November. So none of the infrastructure, stormwater infrastructure, could cope with what was happening. We suffered tremendous damage to civils, roads, perimeter fences. The river ran its banks, obviously. On the estate, we have 7 bridges, 5 of which was overrun at the time of the flood, which caused all sorts of unique challenges to us in terms of the homeowners and you know, getting homeowners safe and making sure that homeowners can actually evacuate and leave the estate if they needed to do so. So when first light came, we sort of started to get an idea of the actual devastating nature of the flood and the effect it's had. Some roads in residential areas were totally destroyed. We had to do emergency work on those roads on the very same day while it was raining, just to get homeowners onto the road and out of the area if they wanted to leave. Looking at everything that happened on the day, I mean, we didn't really have an idea of what was going on. We were waiting for the water to actually subside, you know, because of all of the high levels of water, so that we can actually assess what was going on and where we needed to fix and what we needed to fix. The water virtually just subsided, and we started to get a grip on what was going on when the second flood on the 6th of December hit us. The amount of water that came down, or precipitation, wasn't as bad as the 22nd of November, but because of the weakened infrastructure and because of the saturated ground and soil, the second flood was actually more devastating because there was nothing stopping the water now. None of the civil infrastructure that was there before could now stop the water from actually causing more damage. So we had to go back to the drawing board as far as the assessment of damages were concerned, etc. And we had to also convince the assessor that came out a week after the original flood that they had to come back and reassess the damage completely. We can't just add to what was done. It's basically a reassessment from start. Now, as I said earlier, we suffered damage not only to civil infrastructure, roads, bridges, retaining walls, dams. We also suffered damage to our perimeter fence and walls. We suffered damage to the golf course. We've got a beautiful 18-hole golf course at Kingswood. Anyone that hasn't played it yet, next time you come to the garden route, give me a ring and I'll show you around. And we suffered quite a lot of damage to the golf course, which resulted in us having to invoke, force majeure clause in the agreement that we have with the current golf operator, because of the fact that we couldn't operate, or nobody could access the golf course. Now, maybe a little bit more about that later on in terms of the lessons learned through this process, Lou, because I think it's important that people consider the fact that if there are other parties, third parties, responsible for or involved with your infrastructure and your estate, they need to also be taken into account as far as consultation, as far as contractual obligations and requirements are concerned, because otherwise, you end up in a situation where you might be in breach of certain agreements and undertakings you've made to these parties, etc. And then obviously the homeowners, our unfortunate, there were some homeowners that lost everything. There were homes that were literally underwater because of the landscape on certain areas of the estate. People building homes had to do a lot of cutting on the property itself, and in some sense created swimming pools with their homes. And there are homeowners that basically had 2 million plus rands worth of damage to their actual property, their homes, their furniture. They had to rewire electrical outlets and electricity in their houses, etc. So quite significant damage to homeowners because of surface water runoff. And I think that's something also that one can refer to later on in terms of the lessons learned. Where does this water come from? And is there a way to avoid this water affecting homeowners going forward? And then also because of boundary walls between homeowners collapsing and the water that was accumulated on the upside of the boundary wall flooding the house below. And that also, is a learning point that needs to be considered in terms of stormwater management on those private properties, and how one can actually deal with that better in future. So yeah, in a nutshell, we suffered tremendous damage to all of those areas, and then we had to go through quite a significant process of damage assessment, briefs on repair of damage, engineer reports, and then obviously the insurance also added to the complexity, if I can call it that, in terms of reviewing engineered reports of damage and damage reports, and responding to those. And in some cases, well, in quite a few cases, we had to physically sit down and discuss what the insurance company feels that is their obligation and what we believe their obligation was. And in that, there's also a lesson to be learned.
Thanks, Willem. So sure. And I'm sure it's still an ongoing experience as well. So, and it's so much damage, water, fire, these kind of claims can be devastating and very emotional as well, especially if people are losing their homes. And then, of course, the asset value of the estate, the golf course, and all of those things. And I know that the Kingswood owns its own golf course. So there's all those additional, concerns as well. So if we kind of go back a little bit, And I think here, you know, when you first joined up with Kingswood, and I'm sure annually when you renew your policies, did you think that at that point you had sufficient, when you started off, did you feel you had sufficient coverage in place? Willem.
It's unmuted. There we go. Yeah. Lou, yes. Look, I mean, you know, I'm the grey in my beard is not from it's from hard lessons learned in the past and from general management experience. So one of the first things I did when I started at Kingswood was basically to review where are we in terms of all of our processes, infrastructure, insurance, disaster management, etc., etc. So yes, we went through it and we thought everything was covered sufficiently. As it turned out, Lou, it was, you know, some of the stuff that we had worded as the dam and infrastructure around it was construed by the insurance company as only insuring the dam and not the infrastructure around it, because it wasn't specified. Later on, you know, when we looked at the values, because we had to physically do a value assessment at some point, it was then apparent that the infrastructure around the dam was also covered, because, you know, it was impossible to cover the dam for the amount of money that we were paying insurance for. And I think that's an important element that you touched on there, Lou, is that I think one of the lessons, and there's a few lessons, I've got about 10 lessons here that you know, people can learn from. One of the lessons that you certainly have to take into account is ensure that you review your insurables and insured value on a regular basis. You know, if you install new infrastructure or civils, make sure that you have it insured properly and you know, as quickly as you can. Have a good relationship with your broker or directly with your insurance company, and ask them to assist you also in terms of assessing what you need to be covered for and what the values are that you need to cover that for, because there's a difference between replacement value and insured value. You know, and I'm sure Ashwin can maybe come in more as far as that is concerned.
So yeah, so that I would say that would then be my question to Ashwin. So if we look at the get-go, putting your policies in place, and I think you touched on something there. So the dam is insured, but you insured the dam, and there was an assumption that all the infrastructure that kind of manage and keeps the dam operational and was not insured because it wasn't specified. So Ashwin, maybe you could, you know, and it's easy to talk in hindsight, but remember some of our viewers could use this as an opportunity to review their insurance policies. What is a good starting point from, because an environment like this is very much mixed use. It's got different types of asset classes. There's different types of infrastructure and different responsibilities. You've got municipal, the estate's responsibility, individual, you know, individuals working within the communities, or, you know, investors in the community. What's a good starting point?
Thanks, Louise. I think in a scenario like this, where particularly we're looking at a golf estate, and there's multiple or there's different structures on this premises. So I think it's key for the insured to understand what the commercial policy actually caters for in terms of, and very importantly, the definitions around buildings and fixtures and fittings. So different commercial policies might structure the cover differently. You know, an insurer might give a definition of buildings and fixtures and fittings, and then be very clear in terms of what they might not include or what needs to be specified, depending on how that commercial policy is structured. Typical example, a typical commercial policy would cover your structure, your brick and plaster house, and your boundary walls. But retaining walls will be one of them. But the policy might specifically exclude dam walls as an example. A specified policy or a specialist policy underwritten for a typical HOA or a golf estate, for that matter, might make allowances for where specific structures can be covered within that policy. And typically, if you consider the fire section on a policy, that insurer might include it under a miscellaneous column within that policy. Could be their column 5, or they could introduce a column 6 where that specifically that structure will enjoy cover under. So it's important to understand the actual structure of the policy. Very important to then understand the differences between replacement value and what that property actually can sell for. And I think lots of clients don't differentiate between the two. So your sum insured must always be for your replacement value, what the insurer will be able to build that structure for at the time of the incident occurring, and not, if you're in a very well established area, your replacement value might be disjointed as opposed to what that property could sell for. So there is a big difference in those values as well.
So was that obviously one of your challenges, Willem? Was that was there a disalignment between what you had, what the insurance policy covered from a replacement value to what it actually cost? So maybe you can just explain that a little bit further.
We were actually quite lucky in that regard. I mean, we specifically indicated replacement value, and we made sure that we allowed the values that we are insuring to cover the replacement of that. And especially recently, with all of the dramatic increases that we've had in fuel and other prices and inflation, I think it's very important that if you've reviewed your policy 2 years ago in terms of values, then you will be shocked how outdated the numbers are already on your policy in terms of replacement value. So in that regard, I don't think we had a major issue in terms of the values. The values, I think, were sufficient, and the insurer was happy ultimately with the values that we were insuring. I think it's very important that you specify specifically. So if you are going to, and a dam wall, by the way, very few insurers cover you for a dam wall. Ultimately, it's important that you specify specifically. So if there's a foot valve and irrigation pipes and a pump, associated, and electrical fittings, and a DB box, etc., then those need to be specified in terms of what are you insuring for that specific area. And sometimes you might find that once you start specifying those items, you realize that I'm actually underinsured. Because if I have to replace this pump, the pump is going to be 32,000 Rand, and the foot valve, like in one of our dams, the foot valve was found 1.5 kilometers down the river, and non-functional after that. So all of a sudden you have to replace all of that infrastructure, and you didn't keep track of the price increases on that infrastructure, because you can't go and replace it with a second-hand foot pump or well, you can probably buy a reconditioned pump, but ultimately it's better to replace with new. So I think we were lucky in the sense that our values were fine, but I think we and our previous broker, unfortunately, didn't pick up on this specifically, is that you need to actually specify more specifically what it is. You can't just have a heading of the dam and infrastructure and not specify specifically what's in there, because some of it has to be covered under all risk, and some of it has to be covered under fire, and some of it has to be covered under mechanical breakdown. There's all sorts of categories that you need to be aware and privy to. Now, a good broker will obviously, or a good insurance company will obviously make you aware of the differences between those areas. But I think it's important that whoever is responsible ultimately to carry the can for under insurance or not being correctly insured, need to actually go and make yourself aware of the differences between those categories and what is covered under each of those before you actually finalize or revise your insurance policy.
Suppose as you specify more and more items, your premiums also increase, which is a challenge for some, perhaps.
Well, yes, not only the premiums, Lou, but I think it also gives you the opportunity. And I think, we've got a policy in our HOA that on a regular basis, we don't do it once a year. At the moment, we're doing it once every 2 years. We just go and ask the market, what would you offer us for the same cover? And it's valuable sometimes to do that because then you learn a lot about where you are with your insurance company, and also what the market has to offer in terms of other forms of insurance that you might not have thought of.
And maybe just on that, touching on that note, if you do come, and Ashwin, I'm not sure if this is within your realm, but if you do then come across cover that is more competitive and perhaps more comprehensive, and you decide to change your insurance broker, do you not stand the risk then for being not covered for up to 3 months? Does that, I know that's in my personal situation, is that the same for a commercial entity? Ashwin?
I'm not aware, Louise, and I don't think so
Okay.
it's the case. I think, in this case, the broker might just move his client from one insurer to the next. Very possible that the new insurance company could be a specialist or a specialist underwriter that might offer a specialist type of package that will suit that particular client. So I'm not aware that there might be a gap in cover while that process takes place. In my view, there shouldn't be a lag. From
unlikely. Perhaps that's maybe more just your health insurance than your actual property insurance. Okay, so just if we go back a little bit, a knee-jerk reaction. So the flood happens. You've got people have got access control issues. You've got folks that are wanting to leave the estate. You've got repairs that need to be made. What is that first, and what is that very, very first knee-jerk reaction that perhaps there's a lesson learned that came out of it? Willem?
Well, obviously, open and clear and concise and timeliest communication with your homeowners, I think, is on a residential estate is obviously the most important part of it. So we needed to inform everybody as quickly as possible what the lay of the land was in terms of the damage that we sustained, the process that we need to go through, possible timeframes associated with that process, which best guess at the time. And first, access being the most important one, Lou, making sure that the homeowners has access to their properties. And ultimately, if homeowners don't have access to their properties, you end up with all sorts of other problems. Security is obviously one of the major issues. If you have a residential estate or you stay on a residential estate, security is one of the pillars on which you base the fact that you buy in a residential estate. So, I mean, security was crucial. We needed to ensure that security is not compromised in any way. Now, that makes it very difficult when you've got floods that's taken away perimeter fences, electric fences, river crossing fences, cameras, etc., etc. And we needed to act fast. And I think it's very important that you get the board, the board of trustees or the board of directors on board as quickly as possible, excuse the pun, to actually allocate money as quickly as possible for emergency work associated with what needs to be repaired, and give the CEO or the estate manager some leeway in terms of your procurement policy under emergency circumstances to appoint security guards, get people to secure certain entrances and places, etc., that you need to do. One of the complications that we also ran into was the fact that the flood doesn't only affect the homeowners and the estate, it also affects everybody working on the estate. So, you've got security guards that houses got flooded. They're not coming to work tomorrow. You've got, HOA employees that houses got flooded and the road got washed away, on the way to work. So they're not coming to work tomorrow. So all of that contingency you need to consider, in terms of that disaster. Now, there's quite a few lessons learned. I mentioned them before, but maybe I can just list them, Lou. I'm not sure if you want to involve.
Absolutely.
Let me just list them. We mentioned one earlier. One of the lessons was obviously reviewing, your insurance on a regular basis and making sure that the values that you are insured for is still accurate and that it's described properly. But you also need to make sure, especially on a residential estate, if you've got bridges and if you've got retaining walls, and civil infrastructure, that you have the original drawings from the engineers and the certificates of completion that was delivered by those engineers for that infrastructure. Otherwise, because that is something that your insurer will request before settling any claim. You need to ensure that you register one claim for the flood damage that happened. You're not going to be aware of all of the damage until the water has subsided, sometimes even much later, like we found, because it's raining and everything is wet, you're not irrigating the golf course. So you don't know how many of those pumps are actually damaged, because of the water. So now you start, when the water subsided and it started to dry out, you started irrigating, and now you realize, but the pump at the dam, at the 7th dam is not working. Our irrigation system is not working. The satellite box is not functioning properly. So it creeps out of the woodwork all of the damage that you were actually not aware of at the time of the flood. The obvious and apparent damage was there, but all of this hidden damage you didn't realize was there. So give yourself time to make sure how much damage you've got before you finalize a claim. Also, then, what is important and related to that, I would say, is that you need to then get an expert to assess the damage properly. Don't think what you see on the surface is the only damage, etc. Get a proper engineered damage report. It's going to cost you a couple of bucks, but it's worth it at the end. Your insurer might actually even insist, depending on the extent of the damage or the claim, that you get an engineered damage report for especially the civils. So make sure that you get that and that you identify beforehand, who you typically would want to use for that. Then you must ensure, as far as repairs are concerned, that the briefs are created properly. So it's all well and fine that you've identified that this breach has to be repaired, but the brief associated to fixing that breach properly. And one of the things that is often not taken into account, or there's differences in value between the insurer and civil contractors, would be your P&R, your preliminary and requirements that you've got. The insurer might say, we only allow 10% P&R, and your civil contractor says, well, we charge 23% P&R. That's going to leave you in the lurch, for 12% or 13%. Make sure that no contingency is built into a damage report, because the insurers don't pay for contingency. They pay for the actual damage that you report. They don't add contingency. There is a process in which you can argue, and I think Ashwin can probably give you more information about that, where when you've assessed damage and you realize once you start fixing the damage was actually more, the extent of the damage was more than you anticipated originally, and then the insurers are typically willing to come back to the table and say, well, okay, it's not new damage, it's just the assessment of the original damage was wrong. But once you've signed that document that says, I accept this settlement for the damage that was caused, it's often very difficult. So before you sign that document, and your insurer will be quick to send you the document to sign to settle the claim, be certain that the damage that you are being paid out for, or the money that you're being paid out for, will repair the actual damage. What is very important then is to prepare a repair brief for the civil contractor or the experts that you appoint to actually do the work afterwards. That is typically based on the engineer damage report, but for those other damage that you suffered that didn't require engineered damage report, like your perimeter fence, possibly, or electrical fence, etc., make sure that you involve an expert to draft the brief to fix that properly. And then make sure that you follow up and make sure that the work that is being done is done to the prescribed standard and quality that has been prescribed by the expert. Even if it means that you have to appoint this expert temporarily to oversee the work or supervise the actual repair work for you. It's worth it at the end, for not getting comebacks on that. Then there's also the matter relating to your disaster management plan. I think a lot of guys have a disaster management plan, but it's in the drawer, and the estate has developed over the years, more homes, possibly more access routes, etc., and it hasn't been updated or communicated to homeowners. One of the lessons we've learned is make sure that you've got an updated disaster management plan that covers all of the eventualities, fire, flood, earthquake, all of those things, access routes, emergency evacuation routes, etc., etc., and that you communicate that regularly to your homeowners and have it on your website, and possibly in your welcome pack for new homeowners, so that they're aware of it. Yeah, and then one of the lessons we learned that we didn't know was going to be a lesson was that secure a civil contractor as quickly as you can, because in the area that not only you suffered damages, there's a lot of people around you that also suffered similar damage, and it's for, come first one come get served. So the civil contractor is the guy that you want to try and secure as quickly as possible, and typically your engineer damage report is going to be based on not only values in the market, but they will typically also be consulting with a civil contractor to find out, so this 80 millimeter cobblestone paver, what is the cost of it in the market, and what will it cost to prepare the substrate and install, etc. So they will typically base it on some sort of a measurement or a guideline in terms of civil contractors, and you need to find out who they base it on beforehand. So it's not going to be, if you're sitting in the garden route, it's not prices that are quoted in Joburg, because they are typically 25% lower than prices in the garden route. It's prices of local contractors and local civil contractors. Otherwise, you're going to end up with 25% being 25% in the hole, expecting that the values that are being presented by the engineer are accurate values. And then obviously once you've submitted all of this to the insurer, the process, and Ashwin can talk more about the process possibly, from experience, what we went through is once you've submitted all of this to the insurer, in some cases you get pushback on some of the items where they believe either the engineer overestimated the values or some of the work is not required. Let me use an example, a simple example. And I know I'm wasting a lot of time now. One of the examples was one of our retaining walls, where the civil contractor was going to use manual labor to actually get the Loffelstein out, because they've got a 40% retention of old material in there. And then the assessor said, based his assessment on using mechanical means. So they would have a JCB and they're removing all of the Loffelstein, in which case you're going to break more than 80% of the Loffelstein. So we had to sit around the table on more than one occasion to make sure that ultimately we see eye to eye in terms of what needs to be done and what the value of that is.
Sure. Thank you so much, Willem. That's a journey. Yeah, shame. Okay, and insurance is always a challenge, and there's always going to be negotiations. I think that's just the nature of the game. So Ashwin, perhaps you could come in here and just give us a little bit of advice here when it comes to process and procedure. If the policy has been, when the new business comes to you, you would obviously send out somebody to review the estate and to create that comprehensive policy. And would you then advise them where to specify? So the lessons learned regarding specifying that, would that be advised to your client? And if it isn't, will the risk then fall onto the insurance company for not having given that advice?
So let's start from, I think, from the beginning of the process. So if the client is working through a broker, an intermediary, or with the insurer directly, typically the commercial insurer will have the property surveyed. So ideally, they'll send out a surveyor who would come out to do a risk assessment at the property. Now, in a HOA or in a typical golf estate, for example, it's not a process type of industry. So you're going to come out there and basically try and determine, is the sums insured adequate in terms of replacement values? And I think that was one of the concerns. While we're on that point, just to address, I think it's also crucial, if there's a broker involved, that the broker sits with his client on renewal stage, go through the policy again, make sure that the values are updated. When the risk survey is completed, the surveyor will either sit with the broker or sit with the client just to inform the client, okay, this is what we've seen at the premises. If that quote was completed by comparing a previous schedule, it'll be easy to pick up based on replacement values or calculations done on the premises. So typically they'll calculate the number or the length of the boundary walls or whatever structures on the premises and apply a current replacement value rate to that to come up with a sum insured. That sum insured will include an escalation cost. It'll include VAT, so typically, currently what that property will cost to have it rebuilt. If there's any structures not specified on that premises, the surveyor will bring that to the broker's attention or to the client and say, so ma'am, you've missed out this, we need to specify this item, or if you haven't considered it, maybe it's an all risk item that needs to be specified somewhere else on the policy. So at that stage, the quote will probably get aligned to be as accurate as possible in terms of cover, and then make sure that the replacement value is correct. Now, very often, a big estate, the client will, in all cases, have a property evaluation done already. So, you could use a bank evaluation to determine what the replacement value of that property is or the structure on the property. And that's how you determine your sum insured, making sure that you currently covered accurately at that stage. To the other points that Willem raised, I think when it comes to, I think, drawings and plans and, information that the insurer requires at claim stage, I think it's also crucial, very important to understand that these structures must be approved. An insurer will make sure what they insure is approved. It complies with national building regulations. So making sure that those structures are approved. I think the test for a structure where, maybe it's old or you don't have those plans anymore is if that structure has to be now submitted for approval, would it be approved? And in most cases, I think if it stood the test of time, it probably would, and in my personal experience, the insurer will probably be flexible in that sense to say they wouldn't consider rejecting or repudiating based on the fact that there wasn't an approved drawing, So you could come to some kind of a negotiation based on not having those approved plans in place, because you can determine whether that structure would get approval in those cases.
So when you initially take the policy out, are the plans not required at that point? So they're only required once the damage has occurred. So yes, that's a very vulnerable place to be, with the assumption that when I get into this dispute, that the insurance company will cover me. What can you do to take that risk away slightly when you are originally putting your insurance in place? Should you at that point then try and look for those drawings, or bring out an architect to redraw them, or what would you say could reduce the risk in that situation?
Yeah, I think that's good advice. I think, having those detailed engineers drawings and those schematics and, whatever you need to compile to make sure that you have a history of the property and the structures that are being insured. I think it's crucial, to keeping a history of what is being insured. When that property is being put on cover, I mean, chances are there could be additions and alterations, and things change over the years. So it's also crucial to make sure you update those plans as well. In updating the plans, which will also influence your sum insured, because your replacement values might change as well. So making sure you keep updated with that to keep the policy, relevant at the time.
I know we're coming to the end of our time here. I just wanted to include a few questions that have come in from the audience. Ashwin, and I'm not sure if Willem really, if this, maybe you could have your comments. Can you ensure the greenery, the fauna and flora of the estate? Obviously, a lot of estates have, this is a key attribute of the community. So is this something that you can ensure?
So your typical commercial policy doesn't cater for your lawn, for example. If you look at a golf estate, and I'm using a golf estate as in this particular case, yes, you can specify the greens, and there'll be specialist type of cover for catering for a golf estate, for that matter. But your typical buildings cover will cater, and like I mentioned earlier, is a specific definition saying boundary walls, paved pathways, or brick and plaster. So, they'll cater for that specifically. Unfortunately, loose gravel parts or your lawn is not part of the fixtures and fittings that's noted in terms of your typical commercial policy.
My second question coming from the audience as well is regarding the municipality. Often there is an area within the damaged space, so whether it's water coming in from properties that have, now that land is owned by the municipality and it's damaging a driveway that's owned by an estate. Willem, what was your negotiations like with the municipality where you had crossover?
Lou, we actually fortunate in some sense that we've got very clear lines drawn as far as municipal responsibility goes and where the HOA's responsibility starts. All of the electricity, sewage and water supply on the estate is the responsibility of the municipality. So any infrastructure associated with that firmly falls into the municipality's responsibility, and they had to come and fix quite a bit of their own infrastructure on the estate that was damaged. So that was a simple call to their electrotechnical department with some of the kiosks that got damaged, etc., or the civils department to quickly come and assess and rectify. And I must say we are quite fortunate, other than some places I believe in this country, where we've got a municipality that really sort of steps up to the plate as far as that is concerned. So we were fortunate in that sense. What could complicate matters to some extent is the fact that, we've got a residential estate next to us, and one of the walls between us actually gave way and damaged one of our homeowner properties, etc., because of the wall that gave in and all of the water that came flooding through. Now, that discussion is still ongoing because there's the likelihood there that some of the ROD requirements, if you develop an estate, the municipality has to give you approval, but not only the municipality, but also the Department of Environmental Affairs and Forestry, etc., etc. So part of your register of decision ultimately deals with what do you do with stormwater? You know, and if you are linked to some sort of a stormwater channel going through the town, because you can't stop natural water courseways, otherwise, you're acting illegally. So you have to prepare and ensure that the causeway is kept up properly, is maintained properly, because that remains your responsibility. Now, unfortunately, what happened in this case was where there was supposed to be a settlement dam on the estate next to us. The settlement dam, a couple of years ago, 5 years ago, the homeowners in the estate decided, well, you know, this dam just attracts mosquitoes, etc. We are going to make this a park and no longer have this dam. The original reason why the dam was there was to act as almost a break, a water break, to stop the speed of flow and of water coming through that causeway. And unfortunately, because of that, the water came through at quite a speed, broke down the wall, damaged the road, damaged the homeowner's property, etc. And it's an ongoing discussion. But as far as the municipality is concerned, you must make sure that you know what is their responsibility and what is your responsibility, and who to contact in emergencies if you need people to urgently respond, to something like a flood and damage to civil infrastructure that belongs to the municipality. But I think we were fortunate, Lou, in that we didn't have problems in that regard.
Our last two questions are sort of not really similar, but of the similar nature. So I was asked the question about the term act of God within an insurance policy and where the flood fits into that. Ashwin, could you maybe explain that a little bit to us?
Yeah, sure. I think an act of God, and specifically flood, will fall under what the commercial policy refers to as special perils. So it's storm, lightning, hail, flood, water. That typically is where those perils will be covered under, and that is packaged under your fire section. If you now got your property covered under the fire section or under your buildings combined section, or if you have a specialist type of policy written up for you, make sure that the broker explains that to you and that you have special perils selected. A different insurer might call it act of God or special perils or acts of nature, whatever the case may be, but making sure that those type of perils are actually selected. I mean, because that's typically what you would be concerned to make sure you have cover for. And
my last question, and I'm not quite sure exactly which context the individual meant it, but climate change. So, we're all seeing the effects of climate change at the moment. Perhaps you could put these floods, and there's a heat wave here in Cape Town and, floods in Durban. This is obviously a real thing with a real problem. Looking at estates, would you say that there is some clause, or is it just part of updating your policy more regularly when it comes to climate change? It's a difficult one. Sorry, Ashwin.
Yeah, no, I think climate change, typically you're going to either see a drought, you're going to see flash flooding, typical that type of perils that you can experience. So I think those perils are covered if you have those perils specified on your policy. I think if it becomes a frequent occurrence based on maybe poor design or something that's attributing to now a particular flood, maybe the insurer might endorse the policy for whatever reason because of excessive claims. But other than that, I wouldn't see climate change influencing the policy in a way that the insurer might now say, listen, we don't want to offer you special perils cover anymore. For example, it might influence maybe a rating based on claimed experience and frequency of those type of claims, but I highly doubt an insurer will exclude special perils.
Lou, if I can just come in here quickly.
Sure.
One of the things that I think needs to be considered, and I mean, Ashwin can maybe give some more info on that, is typically what happened in our case also is the 1 in 100-year flood line got affected. Where normally when you insure within the 100-year flood line, your insurance premiums are affected by that. So typically where you had property that was above the 100-year flood line, all of a sudden, because of the flood, now falls within the 100-year flood line. And that people need to be aware of. And I think climate change will obviously play its role as far as that is concerned going forward. But I think what is also very important here, and I omitted to note this as one of the lessons learned earlier, is that you need to make your homeowners aware of the fact that you are responsible for stormwater management on your own property. So, it's easy to point the finger, the water is coming from the road and it's flooding my house, etc. So the HOA is responsible, or the developer is responsible, typically what you hear, etc. That stormwater system was built based on a municipal requirement of a 1 in 10, maybe 1 in 20-year flood in most instances. Estates will be impossible to build if you had to build according to a 1 in 100-year flood. So it's important that homeowners be made aware of their responsibility in terms of stormwater management on their own property. And what we've done at Kingswood is, when you submit a plan to build a house at Kingswood, we insist on an engineered stormwater management plan. So as part of your submission, you need to also show us what are you going to do with stormwater, because you're not allowed to concentrate stormwater onto a adjacent property, or build structures that is going to cause stormwater to accumulate against boundary walls or stuff like that. And you need to then be very vigilant about that, Lou, because what typically happens is someone builds their house and they do it according to spec, and then someone else makes alterations later on, 5, 10, 15 years later, takes out the irrigation system that was put in place for a very specific reason, and then causes a stormwater problem in future. And that could come back and bite them badly, because if they changed plans on an original stormwater management plan without an updated stormwater management plan from an engineer, you could also have an insurance company saying, well, you caused the risk yourself. You did something that increased the risk and you didn't tell us about it.
Absolutely. Hein from Selborne wants to ask us a question. Hein, just pop it in the box, because we need to, the Q&A box, and we'll ask the question. Oh, here it is. So Hein's asking, we from Selborne down in KZN. They've obviously had 450 millimeters of rain during the flood, and so there's been a fair amount of damage that, though manageable. He is saying, we are currently experiencing no water from our municipality. How does his estate work around this? And do they have to have holding tanks to supply his estate water for at least a week? Willem, any thoughts?
Yeah, just unmuted myself. Hein, yes, shame. I'm sorry, my friend, that you guys are going through some tough times at the moment, and our thoughts are with you. And please, through Lou and them, you're welcome to also contact me if you need any further information. If I can share anything that we learned that might help you, I'm happy to do that. As far as water is concerned, we do not have a policy at the estate where we actually accumulate fresh water for consumption by homeowners. I mean, you can understand all of the legalities involved in providing them with water, the purification of it, making sure that the consumption is done or the distribution is done correctly. All of our homeowners, as part of our architectural guideline, has to have their own 10,000 liter fresh water supply at home. So every single homeowner on the estate has their own stormwater supply. A lot of our homeowners, especially those that want to sort of be self-sustaining, went the solar route with inverters and batteries, and also then installed bigger freshwater tanks, 50 and 60,000 liter tanks on their property, that they then put through a filtration process and actually provide themselves with their own water, fresh water. We also find that with a lot of homeowners that got swimming pools and that. But as far as water is concerned, We were fortunate in that we didn't have a problem as far as water supply is concerned. A little section of the estate was affected, and that we dealt with a water tanker that the municipality provided at the time. Now, I'm not sure, whether your municipality provides a service like that, but our municipality immediately provided those homeowners with a tanker and certain times that they could actually come and collect water themselves until the water infrastructure was repaired. We also had quite a few mainline bursts at the time, which I'm sure you're also going to experience, where the mainline water supply of the municipality, because of the flood water conditions, actually burst. And because of what happened with us is the soil got saturated, and the linkages where the pipes actually got linked together, because of the saturation of the sand, started moving and then broke apart. So we were without water for quite a few days as well, and that was quite challenging. Unfortunately, homeowners had to drive to all of the chains and go and buy 5-litre water, and in some cases when they have friends elsewhere that's got water, to go and shower there or bathe there. But we don't have any specific arrangement in place where we can provide homeowners with water, with fresh drinking water on the estate, except for the ways that I explained earlier.
Thanks, Willem. I think we're going to have to wrap it up. As such a great topic. So Ashwin, just my last question to you. If we talk about all these additional challenges like access to water, access to power, people not being able to get into their homes, or or not being able to get across the estate, can the estate put policies, additional coverage in place where they could include the supply of X amount of water, for example, or the rental of X amount of generators for a period of time in their policy to help them with that first sort of 5 days of emergency, or first 3 days of emergency services?
Yeah, I think the typical commercial policy will cater for that emergency. So, if a boundary wall collapses and there's, concerns in terms of security or access to the property, that policy should respond in terms of a clause and extension, for example, damages to buildings, fixtures and fittings does allow for, reasonable temporary measures so that you can secure the property. Or, for example, you need to get a generator in to pump out water, or make an access road clear to allow free-flowing traffic. So the policy would respond, and I think it'll also be to the insurer's discretion based on it being an emergency that needs to be undertaken. So I think any typical commercial policy should have those clauses and extensions to aid the client in any case.
Yes, Willem.
Just briefly, Ashwin, it's a valuable point you make. I think just as a last learning point here is make sure what the values are. What we also realized was you've got security guards in case of an emergency like this to be able to secure your access points or areas where your security got breached due to the flooding and debris against fences and that. Just go and have a look at the values, because in most cases they will insure you for 15,000 Rand for security, extra security services. I mean, that's gone in a week if you have to secure multiple positions around your perimeter, etc. So just be sure that you go and look at those values and give yourself at least a month, depending on your circumstances and how remote you are and access to civil contractors, that you have enough time available and money available to pay a contractor or your security service provider to provide that service for that period of time.
Fantastic. Thank you so much, Willem. Thank you so much, Ashwin. And thank you to everybody. I see there's those of us that have stayed on. As I mentioned, this webinar is recorded. We will upload it to our site. We will share Willem's details. We'll share Ashwin's details with you if you required it. We did put that up in a poll, and I did see hi, and I did see your message there. Thank you so much. I know how busy everybody is, and for putting this time aside, we really appreciate it. Clem, you can pop on the video, and I hope that you all enjoyed this week's Expert Insight series.